I don't, but I don't have a really strong feeling about that either. So there are times when I feel very confident that we're in some sort of a trend and that there are no signs of that trend abating, whether that's to the upside or the downside. Right now, there is no trend. I really don't feel like I have any handle on where this panic ends. But I want to point out something that I think is really interesting. This will be only the second time going back to 1960 that we've seen the market within one calendar year make an all-time high, sell off 10%, get back to that all-time high, sell off 10% again. It's a very rare occurrence. It happened in 1990, coincided with the S&L crisis, and then obviously the run-up to the war in Iraq. This is something that really is rare, and I think when you see something that rare, you have to take a breath and you have to ask yourself, do I have any edge on the next level of panic? Probably not. One thing I will point out, it would be very hard for me to believe that the selling just stops on a dime and we have one of those 500-point rallies like we had in the middle of this week, and then that's the end. It just usually does not resolve that way.
Still feels, Kevin, like we need some sort of flush, whether it's at some point today, into next week, or maybe beyond that. You've got now 84 new 52-week lows out of the S&P, and I'm talking the names, you know, Facebook, AT&T, eBay, PVH, AIG, MetLife, Rockwell, FedEx, Fluor, General Electric, right? 2 full pages. The list goes on and on of these big marquee names that are now hitting new lows.
I get that list on my desk every morning, and it's interesting to watch. And people always ask the question, how low can we go? Well, here's a way to look at it. We're now probably at 14.9 PE if you believe E for next year, which is pretty cheap. But how cheap could it get? Well, it could get to Europe cheap, 11.9. So could we go down another 20%? Yeah, except here's what I'm thinking. If GDP growth into next year stays with a 3 handle on it, and some people don't believe it, I'm in the category that says I believe it. We're getting really cheap. And so Europe doesn't have a 3% growth metric to it. Asia has a 6, but nobody buys it because it's also trading at under 12 PE. I think stocks around the world are getting really attractive. Now, how low can we go? Can we go to a 12 PE? I don't see it. I don't see it. We can go into individual stocks, and we will, but I'm starting to buy domestic positions at 12 to 14 times next year's cash flow. That's always, you've been always rewarded for that. I don't know what the big scare is going to be, but things are getting cheap. They're getting cheap.
Yeah, Meghan, are they cheap enough that you've seen enough?
Yeah, I mean,
the correction, you think it gets worse?
It's hard to time the bottom. We're not in the market or the business of trying to time the markets. We do look out over a 9 to 12-month investment horizon. And based on the economic growth and the fundamentals we're seeing, we're optimistic. We think that volatility, it's important. Our clients are nervous, and we get that. But volatility is a normal part of the market. If you look at the typical pullbacks that we see in any calendar year, on average, we see a pullback of about 14% in any one given year. And on years when the stock market ends up, the average pullback is 11%. We're not even there yet. So we think that it's important to take a step back. Volatility outside of a recessionary scenario tends to be a buying opportunity. So we're not necessarily leaning into this, but we are not making any rash decisions. We're trying to calm our clients down and help them gain perspective on what we're experiencing.
Okay,